thank everybody for joining us for this June 30th report. Of course, we're going to be looking at a lot more things than acres, but we're going to be looking at acres today. This is going to be the first really truer look at where we're at from the March 31st report. And this one right here is a report that sticks with me. Like most farmers, we kind of remember our really, really good years in the field and also the really, really bad ones. This sounds nerdy to say, but I can remember where I was at, Sterling, on June 30th reports in the past, whenever we had an extreme market reaction. So, I can think about 2008. I remember that one coming out, and it was kind of a market breaker. And, you just held your breath because you didn't know how many days of follow-up we would see with that market being down. And June 30th report, while it doesn't change anything in the field, the data changes, the expectations changes, the emotion changes, and that's where we're at today. Sterling, what do we expect to see today?
Well, let's go ahead here and let's share a picture of what we expect to see today. And there we go. And for corn, the average guess is 91.9, which isn't a big change from the 92.0 number we saw in March. Soybeans 87.7, again, not a big change from the 87.5. So that leaves us with one of two things are going to happen. One, it's going to meet expectations, and there isn't going to be that big of a surprise or a move. Or two, we're not going to meet expectations, and we're going to have a big surprise one way or the other, and things are going to jump around. The numbers for wheat, we're not, seeing a big change, and not for cotton either. We also have a stocks report today, and ideas for that. We do have a pretty good range of guesses for where we're going to be with ending stocks, so that could induce some volatility.
Sterling, I look at these, and we've had a week of a sell-off. Big jumps down in corn and soybeans, and wheat lost a lot of what it had gained. Now, to keep in mind, we're not that far away in price levels from where we were at 3 weeks ago, but we're certainly a long way from where we were at last week. And I look at this, and there's part of me that thinks that maybe the expectation of some of this report. I know there was a lot of weather thrown into this rally, but I think this report expectation may be out there. I know from our perspective at AgriSompo North America, we look at, we measure claims on a daily basis. And one glaring difference from 2022 to this year is there is an absence, and I shouldn't say absence, but there is an extreme lessening of prevent plant claims in key corn and soybean states. Now, if you're listening from Texas, Lynette, I know you guys can't seem to have a stable year down there, but a lot of prevent plant claims came out of Texas this year where an unlikely scenario played out. It was just too wet to get things planted after a couple of years of drought. But as you move up into our Great Lakes region, upper Midwest, we really did not see very many prevent plant claims. I think in one of those regions, less than 40. That's pretty astounding whenever you think about multiple states. So our information at AgriSompo would support a smidgen higher numbers than those March 31st numbers. Now, Sterling, tell us about how this market action could have played into maybe what we see here today.
Well, looking at what happened, we had a weather-driven rally. There is absolutely no question that it was weather that drove this. And we are seeing weather that does rhyme a little bit with what we saw in 2012. If you read Wednesday's report, I put a chart of what the market did in 2012. This is very different. What happened in 2012 was very easy. We launched from $5 a bushel in the last week of June. We moved to $8 a bushel by the first week in August. That's what happened. No fuss, no muss, no problem. The world was short on grain, and our grain was frying in the fields. This year is a whole different story. We saw weather turn dry, moisture came out of the forecast, funds were caught in a short position. They had to come in, they got squoze hard. Market went nearly parabolic, blow off top, a week ago Wednesday. Nobody wants to step in front of it. Prices collapse. And we're right back to where we were. Basically, our prices are the same now as they were on the 9th of June. So that was basically, 2.5 weeks ago. So that leaves us with a situation we have now extracted all the risk premium from the market. This report can increase risk premium if we see a deviation, if we see more than expected corn acres or more than expected soybean acres, or however that balance plays out. That can induce some new volatility. The next thing that will happen will be what happens with the next round of weather. As you can see here, the RSI got very, very red. We became very overdone. Now we're back getting closer to oversold, and we are getting the potential for a bounce here. So how the weather goes is what's going to be the driver. The next thing is, as soon as we get off this call, I'm going to do the balance sheets. My guess is for what we're going to be looking at in July, because I'll have the new acreage numbers. Obviously, we're going to have to take off the top end for yields. The heat took the top end off. This rain that we picked up, and if we can avoid heat for a week, we'll put a floor and raise the bottom for where we're going to be. And it's going to be a bit of a guess. But my caution and warning here is this is not 2012 from the market conditions. Okay, we have more grain. It's a much different balance sheet.
It's almost a tried balance sheet. We've experienced 3 years where we've kind of learned to adapt, and so Sterling, I think you did a really good job as we went into June. You felt as though speculators could cause this rally. We could exit short positions and go up. We've kind of preached this message of opportunity in June, and you better take advantage of it. Let's hope that we've got something in July, because minutes after this report's out, we've got one more piece to the puzzle that's somewhat known, and that's acres. And the market thrives on unknowns, and that's one less unknown. So we talk about balance sheet, and yesterday while I was in Paxton, Illinois, we really looked at that balance sheet, and this is what we've got to caution folks on. We know, like Sterling said, we've got diminished yields. The question is how diminished. I don't care whether you put a 165 bushel per acre number on corn or a 175, and I think it falls in that range. I really do. I don't know exactly where it will be, but probably at the upper end of that range right now, given the weather that we've had in the last few days. But the problem, Sterling, like you mentioned, is our situation has changed. It's not 12. We've got some demand problems. Tell us what we're looking at on that demand problem, because that's going to be the story tomorrow.
Well, the other problem with the balance sheet is we have very, very ambitious numbers for export sales. I believe we're at 2.1 billion on corn, if I remember correctly. That number, things are going to have to change in the export corridor for that number to happen. We're going to need to see Chinese demand for corn come back. We're going to need to see some tightening in supplies coming out of Brazil going forward, because remember, that balance sheet that we're now trading is a game over balance sheet for the marketing year that ends 12 months ahead and then some. So we will have another South American crop tucked in there. Now, if Brazil produces like they have, and Argentina has a better year, that is going to create a situation that could be much more problematic. So we have a lot of moving parts here, and this is where we need to be really very aware. One thing, if you look at the corn chart, I'm going to toggle between the two here. This is corn. This looks a little rough and a little nasty. Soybeans, not so much. I mean, yeah, we've come down, but they hit the brakes, and today's action is actually kind of favorable.
Yeah, I tell you what, tale of two crops. So while we talk about, exports probably being lower than expectations, and here's one for you, maybe even domestic feed usage in the United States could tick down just a smidge with the hog situation. But beans, on the other hand, I can't paint a picture, Sterling, where we really build excessive bean stocks. And I love what you said there, because I think this is key going forward. I believe that this report and the weather could provide maybe some fuel for 2 to 3 more weeks. And after that, we will shift to South America. We will shift to volatile periods during that crop time, which are typically December 1st through January 15th. We got to pay close attention to this market over the next 2 weeks, because there is a chance, that good marketing opportunities, especially for fall, we may be seeing them in the next 2 to 3 weeks if we haven't already seen them.
Yeah, if you have early soybeans, watch the August beans. We're trading a full dollar better than November, so that's good. Extend, for corn the next 2 weeks, really going to matter unless we fall into a really severe heat and dry situation, which is on the table. There is the possibility of seeing a high pressure ridge develop. That is one of the scenarios. And if that happens, well, we're going to be looking at hotter than normal temperatures and drier than normal conditions, and that is going to play havoc. The window for bean volatility is going to be longer since they went in earlier. And if we go back again using 2012 as a bit of a template, we actually saw soybean yields recover when there were rains in August, and that actually cooled the rally a little bit. So again, like my old boss at Citibank said, keep your head on a swivel. You need to have your head on a swivel here. And when we see, good prices, be ready, don't sell the whole thing, but throw a few peanuts at it each time. And usually they kill it 3 times. The third one could be potentially the last opportunity. Again, depending on how the weather works out and where we get the precipitation. That's another issue.
I love that advice too, especially for fall crop that must go to the market. Really, anything that's going to be sold prior to Thanksgiving. I really, really like the idea of Sterling's illustration of throwing peanuts at it. Of course, that's making sales, placing floors, whatever we need to do.
Yeah.
Very, very good point.
And do that incrementally. One other thing, we have a dispersion of soybeans in this country where there's dislocation. Pay attention to your basis, especially if you're going to have stuff to bring to the market early. You may get a very special reward out of that in certain places, depending on how things play out.
We've kind of preached that, Sterling, over the last couple of marketing meetings, that if you've got last half August beans in the Delta and the southern parts of the growing area, if you're in the Ohio Valley and can get beans in September, the one thing I am noticing is that as I travel the country, the beans, like I mentioned, they were planted earlier, they're further along. So last year, really the last couple of years, we've had extended opportunities in September. I think they're going to be opportunities. I don't think they're going to extend quite as far into the month as they have because of the number of early planted beans. So when you see that September premium in basis that you can live with, probably a good idea. As Sterling says, throw a few peanuts at that thing. It probably won't last as long as it has the last couple of years.
That is going to be the problem, because the issue in 2012 that took those prices straight up and they held there was nobody there to sell in front of it. South America did not have bountiful corn and wheat and soybean supplies. They were in a drought, and they were in fact pretty much out of both soybeans and corn. This is a little bit different. There are people who are willing to sell into this, and we have a new set of problems in Russia and the Black Sea. And if they have grain, they need money. The easiest way for Russia to raise money is dumping commodities into the market. That's grains and crude oil. And that's crude oil should be moving higher here. The economic news we've gotten over the last couple of days, and even the inflation news, has been really pretty good. And crude oil is not moving because there's plenty of Russian oil getting dumped, because they do in fact need money.
I think back to our March 31st report, and I believe I polled the audience and I said, who believes that we'll be above 91.9 or 92 million where the USDA came out? And the majority of people felt like we would be below. I guess my opinion has changed. I was one of those people as well, but it certainly seems like we just didn't have any of that big adversity for prevent plant, and it seems like there is a lot of corn in the countryside. So we'll see. We'll see what logic does. Logic doesn't work well in these reports, Sterling. So we'll see here in just.
Yeah, what's going to drive this, I think, are going to be some last minute ideas and things changing. We're about 10 seconds from the report. But one thing, the weather was good for planting, Just like it was in 2012, that was the easiest crop to put in because it wasn't raining. So here we go. We should be getting our numbers here momentarily. And the hamsters are working on it here. And well, the market isn't moving, so apparently there may be a problem with the USDA here. Let's give it a second here, and I'm going to have to add a screen. I'm getting a news alert here. And we could be suffering from much to do about nothing. Ah, there we go. There's the quarterly stocks and the acreage number. Corn planted 94.0. That is a huge number. Look at the beans. We swung and missed there with the beans. The expectation was 87.6 and 91. So we took 3 million acres of soybeans and we gave to the corn market. November soybeans are 13.35 and a half. They're up 72 cents. And corn's down about a nickel. Soybeans now up 80 cents.
Wow.
I haven't seen the move in the bean oil. I have to imagine soybean oil will go scorchingly high on this. This is a big swing.
Huge. I mean, what this does,
Hold on.
I don't have the spreadsheets in front of me, and we really weren't prepared for numbers like this. But folks, and this is not the way it's going to work out, but if we throw these numbers into a spreadsheet, a supply and demand spreadsheet, essentially, this is going to take us very, 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 very low on beans. And of course, we know we can't go past zero, but in theory, this is going to take our bean supply in 12 months extremely low. On corn, on the other hand, it blows it off the charts. It's going to take it into the mid twos, 2, 3, 2, 4 billion on carryout, which is extremely high number. So we've got a situation that I have not seen for a very, very long time, in the fact that two extreme acreage numbers come out, and we don't see corn and beans move in different directions very often. But boy, oh boy, this is a shocker to the market. It's going to be interesting to see how this turns out. Sterling, are you still with us? It sounds as if he may be having some technical difficulty. Lynette, can you still hear me?
I can. You're still on.
So, on that note, 94 million acres is really beyond, I think, any private analyst out there. And what I'll do is, since Sterling's off for a second, I'm going to switch over and just kind of share a corn supply and demand sheet. And of course, this is what the market looks at primarily. Let's see if I can pull this up. Just to kind of tell you how extreme this is. And of course, the opposite will be soybeans, but let's pull this up and see what I could find. All right. Lynette, I'm going to do my best to show my screen while Sterling's off and kind of paint a picture for us here. So this is these are the unofficial ASNA guesses. They're really not ASNA guesses, they're mine. But if you look at these two columns, yesterday I had keyed in 92.6 million acres. Lynette, can you see my screen and my cursor all right?
Yes, sir.
All right. And I want everybody to realize the corn situation here. If we go to 91% harvested, which you see kind of matches up with history, I might drop that down to 90.5. It brings us about 83.8 million harvested acres. Then I'm going to use 171 as a yield, and I feel pretty comfortable with that at this point in time. That's 10 bushel, a little over 10 bushel less than where the yield was at, projected in all the WASDE reports up to now. We've known it's ticked down, but I'm going to use 171. Our production puts it at 14 billion. beginning stocks. This is what we had left over from the previous year. Demand has been so bad that I've added a little bit to that at 1.5 billion. We import a little bit, primarily down into the Carolinas. That gives us just under 16 billion kind of left in our bucket. And then we start to take out our usage. And this 5.5 billion, this is our feed number in the US. So this is flocks, herds. It's what we're going to use to feed our flocks and herds in the US. You can see that's up from last year. This number has been estimated to be as high as 5.6 to 5.7. It's going to tick down just a little bit. You can see ethanol is steady, it's healthy, and then you get to this export number. Now, folks, I don't think that this is an underestimation of exports. Sterling mentioned that USDA estimates are around 2.1 billion. Yeah, Sterling's back with us. That's good. I've taken this down to 1.7, but let's go to 1.8. Matter of fact, let's go to 1.9. That would still be a shocker to the market, but I believe that we could be this low. And it leaves us with stocks of, well, one thing I didn't change was the acres. And I'm going to go to 94 million, which is where the report shows. It takes our ending stocks over 2 billion. And this is just a gut feel. My gut feel is that that could be low. I think we might be as high as 2.2 billion. And if you tie that to a price range, mainly using the stocks to use ratio, it's a price range slightly lower than where we're trading now. And when you think about this, if we compare it to where we're at now, this is kind of my estimate of 1.5 billion left over at this point in time. You can see it kind of takes us a leg lower in price. Now, Sterling, you pop back on. I get to be the bearer of the bad news in the market. On beans, tell us in theory where the bean carry out goes with that acreage number that we just got. May be muted. You may be muted.
There we go. Okay, you can hear me now.
Gotcha.
So I'm going to take this harvested bean number down. I'm going to call it 82.4. Okay. And since we cut bean acres, we have weather to shave yield. We cut acres, that's usually good for yield. I'm going to say the yield is still 52. If we leave exports at 20.25, that leaves us with an ending stock of 48. Okay. 48 million, which would be the lowest ever. That would portend to beans being significantly higher. Now, our crush number at 2310, due to the biofuel mandate, that probably isn't going to change very much. That's going to be there. We are looking at a smaller cattle herd, but the hog and pig report actually showed an increase in hog supplies instead of a decrease. So with that being said, we're just going to say feed is more or less the same, and any excess meal we will easily be able to export. So we're going to have to cut exports most likely in order to make the balance sheet work. That means prices are going to have to go up to cut those exports, because if we're globally tight on beans, that will be that. So we take the export number from 2025 to 1950, that'll get us to a carryout of 100. You're probably going to need a price function of that for new crop beans. Oh, that's going to need to be about $15.50, $16 a bushel, based on where the numbers and where things work out right now.
I'm gonna give some advice that I believe is going to be really good advice over the next few months. This gives us a breath of hope and a fresh air for farmers that will need to turn a bean crop. Well, turn a crop into cash in October, November, December. Okay. This is an opportunity. Okay. This is an opportunity. We've got ourselves about 60 to 90 days before we get South American news. With this price going up, it expands acreage again in South America. Just keep that in mind. Maybe not to the rate that we saw last year. Keep in mind in South America, last year, Argentina was a disaster. In Brazil, we heard the reports of a record Brazilian bean crop. Folks, it was not a record per acre yield in Brazil. It was a record number of beans produced, largely because we expanded acreage. An
Right.
average type yield in Argentina, an average type yield in Brazil does not bode well for the market. So listen up here. We've got a chance here. The next 60 days are going to provide opportunities to make these bean sales prior to that South American news coming out. Will prices advance higher? We won't know until December or January. Depends on what they get planted in South America. It depends on the crop. The market will be in limbo now for a number of weeks and just a few months. We've got to take advantage of this inside the U.S. This is a good situation. The other thing is maybe this provides some type of floor for corn, because Sterling, at let's say 2 to 2.2 billion bushels of corn left over next year. I mean, I'm going to put you on the spot. Pinpoint an average December price for that. Take the bean
At
portion out.
2.2,
Yeah.
then let's assume we get there some yield cuts and some of it is export cuts. 2.2 will probably, if we see beans hovering in the middle teens, that might be able to keep corn supported above 525.
Okay.
It probably should, only because you're going to need to buy acres. Right now, corn's getting bludgeoned, which is normal. And again, with the corn, I wouldn't be, they're selling it hard right here. I'm not so sure that's the greatest idea I've heard. Yes, we have all these huge acres. But one thing, when you figure out these balance sheets, we're going to have acres that are going to go unharvested. That is something else besides knocking yields down. And
We
that's
will.
becomes
Yeah.
where the where becomes more important with that.
It's very interesting. That is a good point. And here's what's really bizarre about those acres that go unharvested. It's not so much a region this year as it is little areas within counties. In my home county, I literally, if we miss this rain this weekend, which we've got dismal chances, unless Sterling takes that southern route, we've got like half an inch in the forecast. If it does not rain that half an inch in the forecast, I'm going to make a prediction that it's so important we get that rain that there could be some fields that may not be harvested. It won't be many, but there's a few. We've got situations where corn got out of the ground. It did not get sprayed. Then after that, because we had 5 inches of rain, nitrogen was applied and it stopped raining. There's areas that hasn't rained here since August 10th, 15th. The corn never canopied in this dry, you can look at the virtual crop tour and see a little bit of that this week, but it's pretty astounding. So Sterling makes a good point there. And Lynette, I never put you on the spot on these, but I've got a feeling that if I needed like a trivia partner, especially 80s, 90s history, I'm going to go with Lynette Wilson. Lynette, there's a song, and it was, have a little help from my friends. I can't think of the name of it, but I think corn has got one really good friend right now, Sterling, and that's
Yeah.
soybean.
Yeah. And a little help from my friends. That's from the 60s.
Okay,
Okay.
60s.
Okay. I think that's the Beatles.
It was the theme song for some show in the 1980s.
Yeah. It was a theme song for the Wonder Years.
Okay.
Look at that. Sterling knows everything. He just has all the answers.
Taking him to trivia night.
Yeah, we had a reputation in New York. They called my wife and I the Jeopardy couple.
So, who would win those battles? Would it be Gene or you?
It depends on the topic.
Okay.
If it's literature or something like that, trouble. If it's geography, business, tends to be me.
Well, the next time we have an AgriSompo North America get together, instead of cornhole tournament, Lynette, I'm taking you and Sterling on my trivia team. Okay.
Absolutely. We might even put some money on it.
Absolutely. Yeah.
There we go.
Well, I don't see any questions from anybody that's attending. Usually I get a few that come across my text, but if anybody's got any questions, now would be the time to shoot those to us. I'll take the report. I think this gave us something, Sterling, I wasn't expected in that bean number. But I'll take that. I think that gives us a little bit of optimism to trade with over the next 60 days.
Yeah. And one thing here, we completely ignored the quarterly stocks report because of the obvious shock to the acres. The corn stocks number was expected to be 42.5. That came in at 41.06. And the soybeans were expected to be 805. Those came in at 796. Wheat was supposed to be 612, and we came in at 580. So those numbers were a little bit snugger than what people expected. So,
Sterling, do you care to, I did get a text here. Do you care to show the markets on the screen? You got them up in front of you.
absolutely. Here, let me switch here. And here we go.
I think you scared people when you said corn was getting bludgeoned.
Yeah, it's down 15 cents here. We're near the lows of the day. We're at 567.5, down 13.5 on July. Dees at 514 is down 14.5. We've been as low as 511. So it's down between 2.5% and 3%. Soybeans here are obviously November up 70.5. Up better than 5%. Soybean oil up almost 6.5%. Soybean meal up 4.5%. So this is obviously going to have an impact. Eventually, it's not going to be immediate, but we're going to see impacts in the protein and livestock markets, particularly things that eat a lot of meal, meaning chicken, fish, poultry, have a big portion of the meal in their ration. So that is going to be a factor to contend with. So
After that stuff for 6 months anyway. So we felt do some recovery there maybe some.
So here, if we go back to the chart, it looks like I lost my charts when they're our little blip there. So, but if corn is going to suffer from this. But remember, we get a lot of intense volatility right when this stuff comes out. I'm not too worried about the beans here. The beans are going to hold it because we just lost a lot of beans. See how corn behaves here. Eventually we're going to get cheap enough. Someone's going to want to step in and start buying this. And we were getting close to oversold before the report. So
very, very, very interesting.
We may very well, by the end of the day, the picture might be a little bit different, but clearly this was a big surprise. I actually, in my estimates, thought we'd find it. I actually thought, when guys had to make that last minute decision, I thought they'd lean more towards beans simply because the risk was lower. And clearly, corn, it was all about planting corn.
Yeah. Yeah. And that's that kind of went against maybe what we thought in February or March, just prior to planting. We knew it was maybe a little tighter year on income for farmers. Well, I shouldn't say income, but net profits for farmers. We thought maybe, especially in the Southwest and maybe in the Dakotas, they would lean a little heavily towards beans just because of the cash outlay, but that certainly has not been the case. And I will say, and I mentioned it prior to the report, at a glance, and you can't get much on crop conditions from the interstate. I realize that, but at a glance, I did notice this week, it just looked like there was a tremendous amount of corn. As I drove from Fargo to Sioux Falls, it seemed like there was a tremendous amount of corn along I-29 south. And I see the same thing yesterday as I went up I-57 towards Chicago from Southern Illinois. It sure looked like a lot of corn planted in Illinois.
Yeah. And again, how the weather plays out, it's not too early to start thinking about next year. And clearly, if we see, this much strength in the beans and the potential strength in the beans, that's going to mean an acreage reallocation, depending on what comes out of South America, depending on what Chinese demand out of Brazil actually is. China has a lot of economic problems, and those beans, they want to buy all of Brazil's beans if they can. They may or may not need them, so that will be another factor, but we'll worry about that when we get to it.
I've got to end things here, Sterling, with showing you a picture that I took yesterday. This is not photoshopped, and it's on email, so it's not going to be super clear. But I want to show everybody this. So I wrote in the VCT today that I had, I hadn't heard the term derecho until a couple of years ago. And I know that the phenomenon is not new, but we never really referred to it as a derecho. So yesterday I get my first National Weather Service derecho warning. And there's part of me that kind of laughs it off, like it's just a big storm. I don't know why we're really calling it a derecho. Let me show you this picture. So I left the meeting, and I really left not because I was worried about the storm. I was more worried about getting wet going to my truck. And so I took off. And this is not photoshopped, but the sky was a kind of a midnight blue. If you remember your old crayon sets from elementary school, there was like midnight blue color. It was brilliant. And just as soon as I snapped this picture, everything turned white and gray. 90-mile-an-hour winds, and trucks literally just kind of slow motion tipping over, but just pretty amazing. So I don't know if you can see that picture or not, but I don't want to drive through any more derechos anytime. We had 2 hours, 3 hours away from I-57.
Yeah. The derecho is actually fairly common. However, in the Midwestern states, it was largely a winter phenomena. Where, if you remember back, if you grew up in Nebraska in the 70s, 80s, 90s, or you're in Minnesota, wherever, you would get these mind-bending wind chills. I'm talking 75 below zero when it's, maybe 5 below outside, because you would get these extreme winds coming from the Arctic that would move 70, 60, 70, 80 miles an hour. We didn't really see that in the summertime until I showed up back here in 2020. And I guess I brought, the wind from New York with me or whatever. But
Well, I tell you what, I'm going to sign off. I thank Aaron and Brent for letting me hang out with them here in the office in Indiana. Appreciate it. It's great internet. You could tell I wasn't out in the sticks in Illinois today. And hey, this is a fun one. I think I'm going to remember this report, Lynette. I said I remembered where I was at on Extreme Reports. Something tells me this soybean action today. I want to remember this one for a while.
And one last look at the markets here before we wrap up. Corn is for December at 507, down 21.5, with a 506.25 low. November beans at 1336. Those are up 70 full cents, and we are just underneath the highs of the day. So far, no big changes. Soybean oil's up north of almost 6.5%. The meal is also higher. In fact, this move in the soybean oil was so much it actually moved crude oil up. Crude oil moved about 50 cents after this report.
Amazing.
Which that says something, because that market's, you have to make an effort to move that. So
yeah. Well, very good, Lynette. Thanks for the support behind the scenes and what your team does. And I think, Sterling, we'll be back on here for a third Thursday marketing meeting here in July.
We have a July WASDE, and this will be a big report because you're going to have to change all this acreage, and the USDA is going to have something to say about yields. So that will be an enormous report.
Well, with that, Lynette, you keep those hogs cool. Sterling, I know you're going straight to the balance sheet after this call. Can't wait. So we're going to stay busy this afternoon. Everybody have a great, I'll call it a 4th of July weekend. It's kind of a 4th of July weekend, and we'll see you next time around.
Thanks, everybody.
Thank you. Have a great long weekend.